CRE Capital Financing is considered to be an alternative investment, meaning it is a risky investment like investing in oil wells, gold, and other precious metals. And that means there are special rules that are routinely applied to them and who could invest in them. While some of the rules changed in November 2020 that opened the door, the task remains of providing strong disclosure in a way that also enhances the opportunity to obtain capital. In this video, we're going to focus on using tax-advantaged structured financing approaches to maximize the investment appeal of your deal. So buckle in, hit the subscribe link, and pop the notification bell to see the insider tricks of the trade. Hi, I'm Clint, and I'm part of the Rainmaker analytics team that operates the Envision Capital Finance Business Accelerator Program, designed to help CRE developers and promoters obtain up to $75 million in non-recourse capital financing using the advantages of the new crowdfunding regulations passed in November 2020. Commercial real estate project financing is potentially very risky business. Not all deals get funded. In fact, the probability of success odds of you getting a commercial bank loan are only 1 in 7.48. compared to the 1 in 3.89 odds of having a winning scratch-off lottery ticket. Commercial bank loan application costs, time, and brain damage seem hardly worth it. Don't think the SBA will be much help either. The probability of success odds for an SBA loan are only 1 in 5.55, and you still have to come up with that 20% equity to close the deal. Venture capital or angels, they make up less than 2% of business capital financing for small and medium-sized business. So that works out to around 1 in 50 odds. The change in the crowdfunding rules allows you to use a combination of elements, strategies, and programmatic approaches that change the overall probability of success odds to as good as 1 in 1.47. Only an initial public offering, an IPO, has better odds of probability of success at 1 in 1.35. Why is that? Because crowdfunding is a form of a public offering, just like an IPO. This allows you to hit hundreds, thousands, tens of thousands, even millions of prospective investors all at once on a continual basis with your message in ways that are both similar to that of an IPO and in addition to what an IPO process can provide, thus making the crowdfunding the logical go-to mechanism to provide the opportunity for obtaining capital financing for your project with any degree of certainty that your funds, your time, and your resources are being wisely spent. Part of our initial screening process is an initial interview and review of the potential tax advantage investment aspects that may attend the proposed offering the issuer that you should review with their legal and tax advisors. Simply put, the changes in the tax code allow for super allocations of something called bonus depreciation expense, and spending the money on the cost segregation study prior to undertaking the offering would be a particularly strong opportunity to turn an alternative risky investment into one that institutional investors who invest millions of dollars, not thousands, may find attractive enough to pull the trigger and become a subscriber to your offering. The construction of commercial real estate projects involves many classes of depreciable assets that are subject to the acceleration rule. Furthermore, the design of the project and the construction systems become the entire ballgame. If you do a demo day event with an advanced deal release through the Envision Accelerator program, you're in for a thrill. Why? Demo day events can only be attended by accredited investors. The investors who include qualified institutional buyers and institutional accredited investors, fancy terms for institutional investment funds that have potentially large tax bites they have to deal with each and every year. The coming trend in climate-friendly investments lends itself to exploitation by employing certain construction design systems that can maximize yet another form of tax advantage investing, the tax credit. In the case of commercial real estate properties, the Energy Star tax credits are definitely fungible and may make the difference between you receiving an offer for financing before you even launch the actual crowdfunding crowdfunding offering, or in attracting big investors to the crowdfunding who would otherwise said no in the absence of the tax advantage aspects being showcased, both before the offering commences and during the actual offering launch itself. These analyses require more than templates and more than just trying to throw some stuff out there and hope for the best. The envisioned approach is to try and focus on leaving little, if nothing at all, to chance by covering the totality of issues facing the developer who's seeking capital financing. If you like this video, please hit the like button and share the video with your fellow entrepreneurs, investors, or anyone that you think may be interested in learning more about turning alternative investments into tax advantage investments. Let us know in the comments section what type of information you also like to see. Visit our website or please contact Rainmaker Analytics for more information, because once you understand the systemic approach of beating the odds will ever be in your favor. Thank you.